Welcome back. You're watching Stockwatch with me, Julieta Televi, and joining me to take your stock-related questions this evening are David Shapiro from Sasfin Securities and Wayne McCurrie from FNB Wealth Investments. If you'd like to send questions, SMS 41392 or email stockwatch@bdtv.co.za. Wayne, David, good evening to you both. Wayne, just incidentally, before we went on air, was saying, is David now the oldest man in the market? No, Warren Buffett is still there at age, 93, David? But it's a sad day for anyone who appreciated the wit and wisdom of Charlie Munger, who passed away yesterday at the age of 99.
He used to sit there. I went to a number of meetings and he would just sit there with this almost stoic look. But when he spoke, he was a very wise man, but had very strong views. I love it. Buffett used to call him Old Testament. In other words, his views were very conservative, and didn't like stockbrokers, didn't like accountants, didn't like business schools and that. But very, very, he actually changed Buffett's views ways on that, because Buffett was a value investor. And the one thing about him, and if I say this, he did say, he looked for quality companies with moats, as he called them, with competitive edges and so on. So he did change Buffett's whole view on investments as well. Very strong on China as well.
Yeah.
He said, they work hard, you can't compete with them. So very, very positive on them.
Wayne, there's been quite a lot of obituaries, and I will get to the day's markets and the questions, but there have been some fantastic ones. John Authors wrote a really good column this morning. The FT's obituary was fantastic. And they said, a lot of people have attributed the success of Berkshire Hathaway to luck and time in the game. But John Authors made the point that you just cannot compare the two. And I mean, the FT's stats were, I didn't realize how staggering they were.
Yes.
The compound rate of return was over the period of 1964 to 2022 was 3.8 million% made by Berkshire Hathaway versus 24,000% on the S&P 500. Those numbers are just impossible to comprehend.
No, it is astonishing. Look, luck plays a big part in investments always. But there are people who have been around and have been successful over such a sustained time period. It can't be luck.
In fact, actually, Charlie Munger...
They just did the course. And, if you look into Buffett, you look into Munger, and I think we don't, too many people like to trade. The noise bothers them. They're in, they're out. They want, look for quick profits and that. So... they just found good companies and stayed with them. And I think it's such a simple philosophy, but it's so hard to actually administer and put into practice. Hard emotionally, I'm talking.
Yeah. Okay, well, there's actually a question from a viewer this evening, and before we get on to the day's events on the market, he wanted a view on Bidcorp. We have another viewer asking about Bidvest, which came out with a trading update yesterday, which I think shocked everyone. But he says the best long-term compounders on the JSE to hold for the next 20 years. So in the spirit of Buffettum, are there any shares that are obvious to you? I mean, Wayne, any stand out?
Look, 20 years is a very long time. Economies change, companies change. There are actually very few mining companies aside that have been around for 20 years. The ones that have are the life insurers have been around an awful long time. Banks have been around a long time. Some of the big retailers have been around. So the compounders, if you're just looking South African shares, I would look in there. Shoprite's an excellent compounder. Bidvest, Bidcorp are excellent compounders. I mean, Bidvest is my stock pick for tonight. We're going to talk about that later. But there are compounders, but they go in cycles. There's not one sector or share that's just going to compound for 20 years. David was talking earlier on about long-term view, and that is correct. But effectively, a truly long-term view in investments is 5 years. Things change.
Yeah.
Julieta, the one thing about Buffett, he was very pro-America. And the reason he was pro-America, because of the economy or because of the country, what it allowed you to do. It had the skills, it rewarded it rewarded risk. It had the rights, universities, and everything. It protected your rights. Everything was there for businesses to prosper. And he would say this often. And even now he would repeat it. So I think you have, in the right kind of country, in the right kind of environment, you can look.
Oh,
yeah, with the kind of climate that we're having at the moment, it's very hard to make those kind of choices. But they were very patriotic. Buffett and both Munger, incredibly patriotic and supportive of the US.
Yeah. In fact, actually, and just to digress very quickly, Graham Barr and Brian Cantor write occasionally for the Financial Mail, and they've written a fantastic piece for us this week on compound interest. It's supposedly attributed to Albert Einstein. We couldn't really find that direct quote, but that it's the eighth wonder of the world. Warren Buffett uses it constantly. But they're saying that, if you had invested in Venezuela, for example, it's the underlying rate of growth that matters. It's not simply the compounding effect. So you need a rate of growth, which I think speaks to your point, David, about a US economy. And I think maybe the South African economy isn't quite there at the moment. But just on Bidvest, so Wayne, it's your stock pick, and we'll get your thoughts on it towards the end of the show. But one of the viewers says the Bidvest share price has dropped dramatically over the past 2 days. Is this a buying opportunity at these levels? And at what point would the panel want to enter and buy these shares if one wants to hold them for the long term? So, David, would you? Okay, Wayne.
Yeah,
I think ask Wayne. He's going to tell you in any case.
Okay.
Yeah, I'll tell you now. Then David can waffle more at the end of the program. He'll have more time. Look, the biggest mistakes I've made in investments, luckily enough, most of them eventually did pay off, was to try and catch a falling sword. Where a company hits a bad patch and the share price collapses, and I buy too soon. So I'm fully aware that Bidvest might be one of these, but normally I've made these mistakes with truly cyclical companies, and that's one thing Bidvest is a truly cyclical company. It's actually, as I said earlier on, maybe one of these compounding companies, and because it's taken such a pounding in the last couple of days since that trading update that they gave through us, I think it shows really nice value at these levels. We all know what it's in. We might not realize it, but we touch a Bidvest product or a Bidvest service virtually every day of our lives. When you look at their results, let's call it the services side actually did well. The problems were almost outside of that particular area. And the particular one was that it's so well selling solar panels and inverters that they overstocked, and then the sales dropped off when stage 6 dropped off, at the end of May. And that has affected them quite a bit. They will eventually work through the stock, but it's really a valuation issue for Bidvest. You're buying the shares now at quite a reasonable valuation level.
Yeah.
So I don't think anything's going to change there. Obviously the South African economy hopefully will pick up over the next 2 or 3 years, which will greatly benefit Bidvest, and you're buying it at good prices.
Yeah. David, would you wade in, or do you think the sword is still maybe a bit pricey? Sharp rather.
What's important is that structurally there's nothing wrong. And it's not as though they're making losses or they're under pressure from a liquidity point of view. Not at all. All that's happened is that they're not trading as well as they thought they would be trading. That's what it comes down to. In other words, that's a shock. So they were positioning themselves for a pretty decent second half of the year. They end in June. This would be the first half of the new year. Yeah. And perhaps trading wasn't as good as it should have been. And that was the shock. And that's all they admitted. And of course, they've been hurt by what's happening in the harbors. They heard what's happening with Eskom. So everything along the way is damaging their ability to trade. So I agree with Wayne. It's something they can easily overcome.
Yeah.
And proud record, I think they'll recover very fast. So I wouldn't get too concerned about it. It's just that it came as a bit of a shock to us because they're such a resilient company. But they can't fight off what's a reality.
Yeah, I mean, it actually shouldn't have come as a shock. Maybe what was shocking was actually how resilient they were up until now, because we thought, maybe the economy's not as bad as we think. And on that note, and Wayne, this is specifically for you, a viewer says on a news channel earlier this week, for the first time I've ever heard the most ardent pro-SA Inc. person, Wayne McCurrie, eventually falter and say that the minister in the presidency had broken and destroyed the government business trust by saying that business was orchestrating the collapse of the SA economy. I think we all agree that her rant is terribly misplaced. My question is whether he is still as optimistic with SA Inc. as previously. Wayne?
Look, yes, let's answer that. I mean, when I heard the state president say, was it yesterday, that we mustn't badmouth South Africa, I think the state president's getting that wrong. No one's badmouthing South Africa. People are badmouthing his government.
Yes.
That's the first point to make. We're not badmouthing South Africa. We're badmouthing the ANC government. So I think that's the first thing. But yes, I'm still optimistic. Sometimes you wish you weren't so resilient but we are resilient. We've been able to cope with everything that's been thrown at us. But I suppose more importantly, we're at the bottom of a commodity cycle. Things can't be good. The government has made it worse, unfortunately, with Eskom and Transnet and the absolute magnitude of all the other problems. I listened to a minister talking on the radio this morning, and it was about maybe a 12-minute interview. And I think the minister said, we have a challenge, the word challenge, about 32 times of all the problems that they're facing. We should actually now have a challenge count whenever politicians talk as to how many challenges that they've actually got. But yes, I'm still optimistic. We've come through a lot. We evaluating our current set of circumstances, as I said, at the bottom of a commodity cycle. Always the worst time to look at things. I can remember the late 90s. Things were catastrophic. The rand was collapsing. And then we had this magnificent boom and things were just great. And then they got worse again, and then they got better, and then they got worse where we are now. And that's where we are at the bottom of the cycle. So I'm still optimistic about South Africa and South Africa Inc. And I'm extremely optimistic about the share prices.
Right, questions to get through. Just a slightly more general one to start off with, actually. It was a viewer talking about balanced portfolio, and he said, given the worldwide market turmoil over the past few years, pandemic, inflation, recessionary pressures, Ukraine, Middle East, China's faltering economy, etc., what would the panel consider to be acceptable to good returns on a typically balanced portfolio of mainly local and international equities and a smallish allocation of local bonds, no property over the past 3 to 5 years? What would
David
be fair?
can answer that.
It's a very difficult question. When I say what's the ideal return, I always look at pitching about a 5 to 6% yield in dollars, whatever that translates to. Now, remember, the rand has been depreciating at about 6% per annum. So I always look at protecting your global purchasing power. You know, that's my challenge when people come to me with money. If you understand what I'm saying,
Yeah.
You're looking after pension money. You want to make sure that those pensioners don't get poor, that they remain rich, and therefore you've got to maintain what I call their international purchasing power. So for me, it's in the region of 5 to 6% in dollars.
In dollars, okay.
Okay, yeah. So that's how you achieve that. It's very difficult because there's moving targets all the time. Local equity market, global equity markets, bonds, commodities. It's a very, very difficult to kind of give you the ideal composition of those funds.
Wayne, do you anything to throw in there?
Yeah.
I mean, if on the rand basis, would you look for inflation plus X? I mean,
yeah, look, inflation plus X, these are all very good theoretical and very valid stories, but over a lot longer than 5 years. So over 10 years, 15 years plus, a balanced fund should give you inflation plus 3. Now, all talking pre-tax. Over the last 5 years, you've got 5% plus dividends. You've got 7% from SA shares. You've probably got on average 10% from US shares in Rand terms over the last 5 years. US bonds you got cleaned out in total over the last 5 years. You got absolutely destroyed there. SA bonds are giving you a nice, 9, 10, 11%. So average balanced fund over the last 5 years should have given you, call it 8 to 9%.
Okay, in Rand terms.
In Rand terms, ex-tax.
Okay. Then moving on, there's a question on Vodacom. At 100 Rand, it seems like a buy. What does the panel think, David?
It's a commodity. It's a utility, surely, not a commodity. It's a utility.
But it's a commodity.
Well, it is. They went ex-dividend today, and maybe that's why they were down 5%. But they're plodding along. I find it difficult to find anything exciting about it, any kind of growth opportunities. If you want a fairly decent yield, you'll probably get it. But I think the period of high growth is over. And now it's a matter of using the assets that they have and the product and the business that they have and trying to extract as much cash and pay that back. But I think the period of that we first bought them when we started to use mobile phones, etc., I think that's gone. Yeah. It's very hard to grow their markets, and they've got to find other areas in which they can make money. So I'm indifferent, but it's not something I rush into.
Wayne, are you similarly lukewarm?
Yeah, it's cheap enough. I mean, this is the cheapest it's been in 5 years now. It's cheaper than it was post, at the peak of COVID. It was absolutely, when things were really dire. So it's cheap enough, but I agree with David. These have been ex-growth for a very long time. And by and large, when they've tried to go somewhere else to find growth, not Vodacom per se, they actually made big mistakes.
No.
Yeah, it's cheap enough. It's cheap enough, but these are ex-growth there.
Okay. Then a question on Lewis, and the viewer asks, are results out of Lewis expected to be decent tomorrow, notwithstanding the position the South African consumer is currently in? I have to say I haven't actually noticed any trading updates from Lewis, so that would suggest that things are not catastrophically good or bad. There wouldn't be a 20% variation in the earnings, right?
Yes, if there was more than 20%, we should have got a trading update out of them. But this is one of these typical South African companies. This thing I'm just looking at, this is a 4 price earnings ratio at an almost 11% dividend yield. Look, it's a fairly small company, yeah? I mean, quite frankly, with that sort of rating, the share price could move dramatically tomorrow if the news is good, but I don't know what the news is going to be.
Julian, if you look at consumption, if you look at Pepcor's numbers today, if you've looked at what's coming out of the retailer, it's a battle out there. There's not. In fact, I looked at the numbers for Black Friday. They're not good. I know that Black Friday is no longer a day. It's been stretched. It's almost a month now. Everybody's Black Friday is every day. But from my understanding, the sales are down and volumes are down. So I don't think people have got the money to go out there and buy. And in fact, even in the US, a lot was on buy now, pay later. You buy now and you pay over 3 consecutive or 4 consecutive weeks or something like that. You pay little bits. So they sell furniture. Yeah. And it might be on HP or whatever the new term is, etc. But still, I think I don't think what we've seen coming out of the retailers doesn't really point to anything outstanding. And the fact, it's a well-run company, good business, but I don't know what to expect.
Yeah, I think Bidvest's trading update was simply a confirmation, certainly for consumers, that I think incredibly high inflation and high prices and electricity cuts and interest rates, I think have actually just... everyone's right at the end. You were hoping for maybe a little bit of relief, and it just hasn't happened yet. And I mean, that surely is reflective.
in theory, that's the time you buy these shares, is when things are catastrophic and disastrous and there's no hope left. And because the cycle can turn, we can get lower interest rates, and we will get lower interest rates. The rand will improve, if the cycle works like it has in the past. And that's the time you buy these sort of shares. But I just don't know enough about Lewis, and certainly Bidvest, the durable side was poor.
Yeah. And of course, Lewis is exposed particularly there. A question on Dis-Chem, so keeping with retailers. Can you please ask Wayne and David their opinion on Dis-Chem? Stories seem great, yet the share price has gone nowhere in 5 years. So would Clicks be a better play?
Did I misread it, or did it shoot up yesterday?
I did not see what happened to Dis-Chem yesterday.
Yes, it did.
Like 29, yeah. I mean, there was a massive gain. I don't know what drove it. Or whether
might be fat fingers again, but yeah.
It could be. That's the only worry. But I mean, it's kind of been plodding along as well, sideways. I think they're getting their strategy, in tune. I think it's not a bad business at these levels. I don't know why. At the 29 level, I preferred it at around about 24, 25. But at these kind of levels, I'm not sure. It just worries me that it just shot up like that, and it'll probably undo itself. But it's a pretty decent business. There's nothing wrong with it, and it's nothing wrong with where they're going. They're expanding. Their shelves are always full. Their shops are always full.
But as the viewer says, great stories, but over 5 years, you've got not much to show for.
Well, yeah, look, you can say that for any retailer in South Africa. I think it's been a very difficult time for retailers here. You first had COVID, and then you were followed by load shedding of a level that we haven't seen. I'm just looking out the window to see if we've got load shedding or not. But I mean, at these kind of levels, it's got to impact them, and the additional cost of keeping their businesses going. And now you've got, I know they're an importer, they do manufacture locally, but who knows what's going to happen to their suppliers as well.
Yeah.
So it's listen, they do okay, as Maya Khan used to say, you write the reports, you man the tools, I'll write the reports. In other words, it's a lot easier to write reports and to make comments than to actually run businesses.
Yeah. Okay, I'm just going to ask Wayne one last question, seeing as he's given us a stock pick already. Sun International, Wayne. A viewer says, can you ask your panel why Sun is a cautionary out that says nothing, really, other than that they're eyeing a possible acquisition? I guess they're within their rights, right?
I like this industry. I like the leisure travel, foreign tourists. I think it is truly the one growth industry in South Africa. And all the companies that are aligned to that are reporting the same thing. So I actually like it. But what I did see the cautionary there, but what it's about, the exact details I'm not sure.
We speculate that it might be some sort of online gaming sports betting play. That is, they've got a guy called Nigel Payne on the board. He used to be sort of big in the UK online gaming industry. So that's the conclusion that we've drawn. But yeah.
Quite possible.
That's it. That's the big growth industry in South Africa: online gambling, sports betting. Yeah, but the chart looks great, and even Bidvest said the hospitality side is doing well. So Wayne's right. If you looked at Zeda, all the different companies are doing well. Yeah, that's one growth area.
Okay.
And we can't afford a holiday other than in South Africa.
Exactly.
Anyway,
David,
I'm going
your
for,
pick.
I'm going for Eli Lilly. I just think this is a big industry. These weight loss drugs, the obesity drugs, the diabetic drugs are big. Look, they've also got Alzheimer's, which is very close to me as well, which I watch with great interest to see if they're making any progress there.
I wouldn't have said you've displayed any signs yet of Alzheimer's, so we'll tell you.
So I think this is going to be a bigger industry than we imagine in the pharmaceutical side. And the numbers being brandished about, which I don't want to quote because I'm probably going to get wrong, don't dismiss it. And I think the consequences of this are significant as well. In other words, it can have issues in other industries.
Yeah. Okay.
That's it.
That's it. We have to leave it there. We have to cut you short. David, Wayne, thank you very much for joining us this evening. Great to chat to you as always. David Shapiro is from Sasfin Securities. Wayne McCurrie is from FNB Wealth Investments. And coming up next, the close. Stay with us.